Thank you for joining us. This is Kathy Barzal with DiTommaso Real Estate, and I'm joined today again by Jennifer Daly of Roundpoint Mortgage. And Jen, I work with a lot of buyers, and there's like a misconception out there that once they either are pre-approved, get their pre-approval in hand,
right,
and or once they get their mortgage commitment, once they're in contract and get that mortgage commitment, that they don't have to worry about it anymore, like they're good to go, that they don't need to worry about their credit. Can you give us some insight on that?
So that can be a big problem. People do have that idea that once they're approved, everything is good. They're not. It's a period of time when you should pay attention to not running your credit multiple times, because credit being pulled multiple times in a 30-day period can reduce your credit score, which will affect your rate, especially if it's locked or not locked at the end of the day. Also, money transfers. A lot of people just make cash deposits or they transfer over and they think nothing of it. All of those monies that are deposited or transferred have to be traced. That's the Patriot Act. So it's going to be looked at when we look at your final assets before closing. During a pre-approval state, that's a little bit different, but you still want to be aware of what you're doing because you may find a house the next day and that may be the bank statement you have to show. One of my very favorites is when people change jobs and think it doesn't mean anything. Or we flat out just lost our job, or we left our job, and we think it has no bearing on the mortgage. So for everyone, this is an important thing to remember, that prior to closing, usually 24 to 48 hours, we're going to call your employer, and we're going to verbally check that you are still employed. So most people, and I've had it happen multiple times, will say, oh, I didn't think to tell you, and then the deal is dead at the table. So I think those are the most important points.
And I think also too, people start looking going for appliances, furniture, or you know what? I think I'm gonna get a new car to celebrate.
That's right. That's right. If you see your lease is ending, give me a call. A lot of times I've extended leases just for 30 days to get through the closing, and then we deal with it afterward because it can do two things: increase your debt ratio, and it can also affect your credit. So any kind of credit limits that you have, you want to keep your credit cards the same way when I pulled your credit, as best as you can, because if you raise those limits and you continue to put more onto those credit cards, it could affect
and closing credit cards. Like
opening and closing will definitely
people feel like, and it's funny, like showing houses and stuff, like buyers are like proud, like, wow, so I paid off that credit card and then I closed it. And it's like, did you talk to your mortgage person about that? Like, is that something you should be doing?
No, you really want to keep it status quo because closing it really affects your credit. You don't want to do that because banks like to see open lines of credit with not much on them. And the minute you close that trade line, you've just taken a line of credit out of the picture, which was actually a positive for you. So those are huge things that we talked about today. And really, really at the beginning of any process with my clients, I do inform them of all of that because you don't want those mistakes happening in the middle of the process.
And
it's never good.
Unfortunately, it's never good. And then we're going along during the transaction, and next thing you know, credit gets pulled again, and then they have all these things happening, or their bank statements are not looking like they did 2 months ago. For whatever reason, or leaving their job.
And I've made that call multiple times with, hey, what is that $700 BMW that wasn't there prior to? So it has happened.
Absolutely.
Over 15 years, I've seen a lot.
Definitely. So, the main thing is, if you changing jobs, whatever the situation is, if you have a lease going back, or if you want to, your car dies and you didn't have a payment, now you have to buy a new car with the payment, talk to your mortgage person first. Give Jen a call. You have any questions at all. It's really important, like Jen said, to keep everything status quo from the time you get your pre-approval, unless they tell you otherwise, your mortgage person tells you otherwise. But that's your tip today, so we busted that myth. And I thank you again for joining us, Jen.
My pleasure.
And Jennifer Daly's information is going to be up at the end of this video. Please feel free to reach out to Jennifer with any mortgage questions. And if you're ready to go house shopping, give me a call. Have a great day.
Bye.